Google, manufacturers, you are provided with their information relating to the year ended 29 Feb 2016. Calculate the direct labor cost. So that is our first question, first bullet. If you look at information A, that is really the only piece of information that is relating to Google. So we do have 5 workers here. Their basic wage is 40 rands an hour, and they've worked 1,920 hours, but they've also worked overtime as well. So overtime is going to be their basic rate plus the 75%. We've also got deductions and we've got employer's contribution. We never include deductions when calculating direct labor costs, but we must factor in the employer's contribution, and that is only on the basic wage. Okay? Read very, very carefully. So this is what our question is going to look like. So 1,920 represents all the hours worked times the 5 hours, times the 5 workers, times 40 rands an hour. Okay, so this represents the number of hours, that's the number of workers, and this is going to be their rate per hour. Okay, and now we need to factor in overtime, and it's going to be another 90 hours times our 5 workers times the basic rate plus 75%. So if we just do a quick calculation here, it's 40 rands and 75% over and above that 40 rand amount. So if we just do a quick calculation here, it's going to be 40 times 1,5, which is equal to 70, and we can just plug in our 70 there. Okay, so let's just total. So just plug the first calculation in, you get 384,000. And 90 times 5 times 70, just plug it in, you get 31,000. Okay, guys, is that it? Is the calculation finished? Yeah, okay, it's done. Now I'm joking, it's not done. We still need to factor in these employer contributions, and that's going to be 11.5% of our basic wage. So I'm just going to change colors. So this represents our basic wage, right? And that represents overtime. So on our basic wage, we need to add 11.5% over and above. So it's going to be the 384,000. So we don't multiply it by 1,115 or 11.5% and add it to the total amount. We just want the employer's contribution amount. So I'm just going to describe it as EC, 11.5%. And we get a total here of 44160. So add, and our total amount here is going to be 459060. And that's it. That's your calculation. So we've got our basic wage amount, just to recap. We've got our overtime and employer's contribution. We don't add that 11.5% to the 384,000. Well, the way we've done it here. Okay. And you add these 3 amounts and you get the 459060. And we can plug that straight into our production cost statement. So that is coming from question 1.2.2, but we can do that a bit later on. Let us take a look at the direct material cost. I am going to clean the screen now. Okay, the screen is clean. I did clean it with Handy Andy. No, I'm joking. I cleaned it with Jig. Okay, no. I cleaned it with Omo. Okay, let's focus. So, direct material cost. Now we need to take a look at information B, raw material, fabric. So feel free to pause the video and have a look at all of these amounts. Try and figure it. So we're definitely going to use our opening stock, and we're definitely going to use our purchases amount. And we also need to factor in the 5,500. So it's going to be our rand value divided by, well, our units, well, the meters amount. For those of you that have already covered ordinary share capital at school, when you calculate that infamous, notorious average share price, you take the rand value of all your shares divided by the number of shares. So what your opening stock was, what you've repurchased, what you've additionally issued. It works quite similarly here. Same WhatsApp group, you know, if you know, you know. So it's going to be that 131,500 plus the 584,000 divided by the corresponding meter amounts. When I say corresponding, it relates directly to the 131,500 and the 5,400 relating exactly to the 584,000. So our numerator is sorted. Denominator is 1,350 plus the 5,400 400. But guys, we have an issue here. This is just going to give us the value per meter. So whatever like random amount we get here, it's going to relate to just 1 meter. We don't want that. We want the total direct material cost. So what has been issued to the factory for production. And the reason we're using a method like that is because it says weighted average method. And we could have used FIFO, first in, first out. That means we use the stock that was first bought, we use that first, and only then would we have used the purchaser's amount. But if it's weighted average, you can use this like average share price method, if you get me. Okay, so I've got a bunch of videos up on weighted average, first in, first out, specific identification as well. Please feel free to have a look at it. Just for this video, we're going to go through weighted average because that is the question. If you were interested in FIFO, please take a look at the FIFO videos as well. All 3 methods are examinable, but weighted average and FIFO tend to come out a little bit more than specific identification. It's used a little bit more in the real world. Remember, specific identification would be for more specific brands, specific industries, typically luxurious goods, like very fancy laptops like Alienware or luxury cars. Okay, weighted average we would use for something like soccer balls or like helmets. You know, they're in the same price range. We sell them in bulk. It's just maybe easier to use weighted average. And first in, first out, we would typically use for industries that utilize perishable goods. Okay, going off on a tangent now about inventory. I know we are doing manufacturing, but well, we saw weighted average here. So yeah, I just wanted to give you guys a little bit more insight. Okay, so whatever we have here, we must multiply by 5,500. That was our raw material issued to the factory. Okay, and if you plug all that good stuff into your calculator, you should get 583,000. Okay, and now we can plug all those values into our production cost statement. Okay, I'm going to clean the screen again. This time I'm just cleaning it with sunlight soap. Okay, let's use a dark blue, like we're writing an exam. I'm so grateful that I don't write exams anymore. Hey, in matric, tough times were lasting, chief. Okay, let's continue. Look, I hope your matric year is going well. Mine went well as well, but I can gladly tell you that I'd rather teach and tutor matriculants than actually be in matric. It wasn't just the academics, it was like all the other stuff around it. Like, what am I going to do next year? Oh, matric dance, trying to impress people that don't particularly care about me and that I don't particularly care about, you know what I mean? But, I'm a lot older now. Depends on when you're watching this video, but I'm like 5 years out of school, bagged my degree, been traveling a little bit, been tutoring full time. So yeah, anyway, that's just a little bit about me. Let us continue. This is one of my longer videos. I can't lie to you. Usually, like, if you've watched all my other ones, I'm very quick, I'm very choppy, I'm to the point, because those are the videos I wished that I had in matric. Not these long, drawn-out 46-minute episodes where you have to listen to some cheesy intro. Yo. I just wanted quick, punchy videos, just to get the point across. I really hope you guys aren't watching this the day before your exam, and I'm just like talking your ear off now about my personal stories. I'm just yapping away. Okay, anyway, let's continue. So the production cost statement, it's got 2 line items. So direct material cost, direct labor cost. Okay, if you abbreviate in the exam, myself, I'm going to have a heart attack. Just write the full thing out as a belief. It's direct material cost, direct labor cost. So whatever we got for direct material cost, again, that's coming from 1.2.1, and same for direct labor cost, also coming from 1.2.1. Okay, our direct material cost amount was 583,000, and our direct labor cost was 459,660. If we add them together, we get our prime cost, and that'll be 1,042,660. So the direct material cost would be KSI, and the direct labor cost would be Logan Paul, and that's how you get prime. That was a terrible joke disgusting. I'm so sorry for making it. Okay, let's continue. And then we have, look, I'm not going to sound that one out, Joe. Then I could get some in trouble. I could get in trouble with YouTube. Okay. Factory overhead costs. Remember, write the whole thing out. I'm just doing it to conserve a bit of space, and my hands be hurting. No, I'm just joking. I'm trying to keep it relevant to Gen Z. Okay, enough jokes. Let's just finish this video. Okay, so this 340, that represents factory overhead costs. And if we add the prime cost and the factory overhead cost, we get our cost of production of finished goods. And that amount is going to be 1386000. And that's it for the question. Okay, let's do one more on the next slide. Okay, no, I'm just joking. That's it. You can go breathe now.